personally, I always thought the BOJ buying equities was at best unnecessary, at worst totally counterproductive because it distorted the market. So it's created this overhang, but that should be easy to deal with if they can make it into some kind of equivalent of a sovereign wealth fund and transfer it to some other part of Japan Inc. But the other major Japanese institution that reallocated out of yen fixed income to Japanese equities was the GPIF, which did it at the launch of Abenomics at the order of former Prime Minister Abe, which was an entirely correct move. There's been massive outperformance by Japanese equities over JGB since the launch of Abenomics. But contrary to what I thought at the time, the rest of institutional Japan did not follow the GPIF lead. But what all this means is if the end of deflation is for real, and I still think there's a better 50% chance it is, then we haven't yet had the reallocation into Japanese equities by Japanese institutions. And if that happened, there would be a huge move in Japanese equities.
To what extent? I mean, we're already at 40,000 on the Nikkei. When you talk about a huge move from here, what would that mean?
No, all-time high on the Nikkei. Well, because, I mean, the Japanese institutions have not invested in their own stock market. The only market the Japanese domestic institutions have increased exposure to in equities in the last 10 years or so has been U.S. equities. And as you rightly note, they expanded the NISA tax reform for the start of this year. So flows into NISA accounts have picked up, but so far the data suggests that most of the flows are into US benchmarked indices. So Japan's about the only market in the world where domestic institutions and domestic retail do not support their own market. So if they ever change their mind on that, it would be huge. And the fact that the Nikkei's reached an all-time high will start to influence retail investor sentiment. So it's if the move out of deflation is for real, Japan's a fantastic story from an equity standpoint.
Can I just really quickly ask you to that effect? Do you foresee a set of circumstances where they get directed? And I'm not talking, Japan, you could argue, is a control economy, much like China, but just with, different layers of complexity. But do you foresee a set of circumstances where they potentially get directed to buttress up the market, Japan Incorporated?
Well, I think if the Japanese start moving, reduction back into Japan, that's a big catalyst. Meanwhile, the negative rates are just a stupid idea anyway, regardless of whether it's deflation or Japan. In Japan, negative rates are bad for banks. If a policy is bad for commercial banks, then there's no point having negative rates. It's bad for the economy. That's obvious. That was obvious in the Eurozone. The European banks were laboring under these negative rates for years. They served no useful purpose. When the negative rates ended in the Eurozone more than a year ago, you saw a huge rally in Japanese banks. So ending negative rates should have happened months ago in Japan, and hopefully they finally do it today. That's a different issue from whether we're coming out of deflation. Negative rates help keep you in deflation. They have the precise opposite effect of what the central bank thinks.